all of our news. Now we move on to our next news. OPEC is set to ramp up petrol production next month. Saudi Arabia, Russia, and 6 other key members of the alliance have announced a bigger than expected hike in oil output for August, boosting supply to 548,000 barrels per day. The move comes as petrol prices remain under pressure globally, with rates hovering around $65 to $70 per barrel. Analysts had anticipated a smaller increase, but the group cited strong market fundamentals and low inventories as key reasons behind the decision. Experts say this signals a strategic shift towards gaining market share and away from supporting prices, with petrol demand still robust. Despite geopolitical tensions in the Middle East and Europe, the market now watches whether further supply increases will follow in the coming months. Now we are joined for this discussion with Shruti Das Gupta. She's an international relations expert joining us live from New Delhi. Thank you, Shruti, for joining us today. Good to see you. What impact could this bigger than expected output hike have on global petrol prices in the short term?
Greetings, Asuma. Thank you for inviting me. I believe that the increase in barrel is almost 100,000 barrels that they are promising during this time, and they have projected it as something that would benefit the summer crunch, as they have called it. This would also impact the American shale drilling, which have been going gung-ho, and the latest bite from that particular sector has said that they will now try to work lesser wells so that there is not an oversupply of oil. Now, Saudi Arabia has to balance walk a very fine line between supplying as well as the oil price. If the supply increases by a large amount, very suddenly, it might crash the oil prices, and the already deficient budget of Saudi Arabia, which has had to cancel a lot of its programs that were part of the its Prince Mohammed bin Salman's plans for the nation, will have already rolled some of them back. If the price drops really radically, it will affect their income from it. Apart from this particular aspect, we also need to understand Iranian oil is still not on the market, as well as Russian oil is not on the market. So supply is is really short, and demand is climbing. So this particular thing would probably bring down the oil prices to less than $60 per barrel, and it would be beneficial to a lot of nations, specifically those like India that are expecting to need this fuel price downward trend.
Thank you, Shruti, for sharing that insight.